Hello, welcome to Venture Capital with me, Katie Pilbeam. This week we focus on Ukraine as the embattled country remains on the brink of bankruptcy. Plus, the digital currency Bitcoin is dealing with its own battle, enduring another blow to its reputation. Meanwhile, Russia's currency, the ruble, is taking a battering of its own. But first, Ukraine's treasury is empty, with debt at around 80% of the value of the entire economy. The country's currency is loitering around a 10-year low at the moment, losing around a fifth of its value just this month. And credit agency Fitch has downgraded the economy to junk status. Ukraine's expecting an EU-IMF economic package soon, but the IMF loan promised last August fell through. And in December, Ukraine signed a $15 billion deal with Russia, plus the gas discounts, of course. This has been postponed until a new government is formed, but Russia already holds $3 billion worth of Ukrainian debt, which was issued last December, of course. So how has all of this been affecting the Russian economy? Well, the Russian ruble has also been hit, stubbornly stuck at a 5-year low. That's as investors back away from emerging markets. With the threat of a debt default by Ukraine rising, the Russian economy is unlikely to get back those $3 billion. That's the concern at the moment anyway. Russian stocks have also slumped, including Gazprom, which provides Ukraine with 60% of its gas. Ukraine is also the main transit route for Russian gas to Europe, where Gazprom has a quarter of the market share. The country already owes Russia about $1.6 billion, and that's for natural gas. So for more on the Russian economy, how it's been affected, impacted in all of this, and the financial strain on Ukraine, I'm now joined by Robert Olds, head of the neoliberal think tank, the Bruges Group. The situation at the moment is Ukraine need, they say, $35 billion to get themselves back afloat. Where is that going to come from? Because as I understand it, it's not going to be one source. They're going to have to appeal to several sources in order to get help. Do you think that that could create some complications in itself?
Yes, that Ukraine will then become, in itself, bidding itself to other countries around the world, offering itself in exchange for financing, in exchange for people taking on Ukraine economy's debts. That will create a bad political situation. It's not one which is conducive to Ukraine being an active, independent country. Of course, this didn't have to happen, this scenario come to pass. It didn't have to get this way, but of course, if countries are going to get involved in promoting regime change within Ukraine, which has now taken place, then there would always be instability, which dries up foreign direct investment. It dries up people buying Ukrainian debt, which is why it's gone to junk status. Really, the whole process of what's happened in Ukraine is deeply regrettable, and the situation has been generated where the economic future is looking very bleak.
We've already seen tensions on the street, to put it very modestly indeed, but when these reforms come into play, if the IMF loan is accepted, what's going to happen then? That concerns me as well. Do you think that we could have more problems if austerity is really heightened?
Exactly, you're exactly right, because when the IMF loans out money, there is always deep conditions which are very onerous upon those who are receiving the money. We look at the money that was loaned to Greece. It, of course, ruined their economy because they had to accept that their assets were owned by the European Central Bank, and the International Monetary Fund had to accept deep cuts to pensions, to education, to all kinds of welfare spending, which actually created a deeper economic crisis and massive unemployment. IMF involvement can actually be a double-edged sword. It can really create economic tensions, and austerity, as well as accepting more regulation from the European Union, will be the last thing that Ukraine actually needs.
OK, Robert, we'll leave it there. Let's just hope things get resolved very quickly for the sake of the people on the streets there. It's getting very dangerous and nasty indeed. Robert Olds, thank you for your time today. I really very much appreciate it. The future of the digital currency Bitcoin has once again been called into question because Mt. Gox, which is based in Japan and was once the largest Bitcoin exchange, mysteriously disappeared this week due to a reported $1 million theft. Customers have been unable to withdraw their funds for more than 2 weeks now. So to discuss what this means for the Bitcoin, I'm now going to be joined by currency expert Leander Bindewald. Leander, tell me, how much more can the Bitcoin take before people finally go off of this cryptocurrency?
Honestly, I don't know. If you would go by predictions, Bitcoin would not have existed in the first place. And to us, really, the question isn't so important, as Bitcoin for us has really been a proof of a concept, and it has already delivered as such, and it's been a great success. It's thrown the door open to questions about money and what money could be that have really never been asked in this public arena before. In this sense, it is already a success.
Bitcoin has had a real roller coaster. I'm thinking about the Silk Road incidents as well, the Mt. Gox this week. Does it prove that unregulated currencies don't work, though, considering so much has gone wrong?
That is really only if you look at this one currency only. There are hundreds of unregulated currencies, by which we probably just mean not controlled by the states, out in the open, and they have little to do with the cryptocurrencies that we only saw in the recent years. There's great examples all over the world, from business-to-business exchanges that use their own currencies to help businesses to trade with each other, to social currencies, or even local municipalities now issuing their own currency. For example, in France, the city of Nantes issuing one for their business community, the city of Amsterdam issuing one for the engagement of citizens in city planning and activities. There's a number of really great examples out there how unregulated currency in this sense have already worked and delivered. It's really only if you design a currency with these specific features and properties as Bitcoin that you quickly see all these troubles coming right behind as well.
But the fact is, Bitcoin is the only one that anyone has heard of, really, on the mainstream. So do you think that Bitcoin, yes, in a way, has given cryptocurrencies a bad image?
Well, it's all part of a very long learning curve, and Bitcoin as the currency now getting a lot of bad news is of course a concern in terms of communications. It's always been our effort to actually educate people and regulators and businesses and implementers at the same time to what a currency actually is and what the difference to a payment system is. And once we get this message across that Bitcoin, the currency has failed, but Bitcoin, the payment system, the protocol, has really created revolutionary innovations in a sector that was long due for an overhaul, that will stick and that will create good news and really revolutionary new opportunities left, right and center. Well, people marveling about what went wrong with Bitcoin and how you can make it better will in the end actually lead to these new currencies that will change the financial system as we know it.
Switzerland's banking empire, Credit Suisse, is accused of helping US customers to conceal their Swiss accounts in order to avoid paying billions of dollars in American taxes. According to a report from the US government, the Swiss bank created false visa applications and organised business in secret, remote-controlled lifts in its quest to hide tens of billions of dollars from US authorities. Credit Suisse CEO Brady Dugan said that he deeply regrets that some of its bankers violated US tax laws, but that there was only scattered evidence of improper conduct. All right, let's move on and talk about corporate news that's been moving and shaking the markets here. Russia's oil major Rosneft has stopped working with credit rating agency Fitch Ratings. Rosneft will continue working with Standard & Poor's and Moody's. Two other large Russian companies, banking group VTB and car maker Avtovaz, also recently severed ties with Fitch. They accuse the agency of a lack of professionalism. And Russia's largest children's retailer plans to offer an initial public offering, an IPO, in London mid-March. Children's World will place more than 184 million shares on the London Stock Exchange. This follows large Russian retailer Lenter's debut in London on Friday. Diamond producer Arosa plans to increase diamond production to 40 million carats a year by 2020. The company, which produces a quarter of the world's diamonds, generated a net profit of $910 million. The planned expansion will be possible once 2 new mines begin working to full capacity. And it's Pancake Week here in Russia, or Bellini as it's called here, which is just a week of feasting before a Lent, of course. And the average Russian will spend $14 indulging in their passion for pancakes. Now, according to a study by the annual Maslenitsa Index, which says that the perfect pancake the platter itself consists of a kilogram of pancakes, of course, enough butter and caviar to fill them, and half a litre of vodka. Last year, Russians spent less on their pancake week, and that was mainly because vodka was cheaper last year. So there we are, caviar and vodka. My goodness me. That is it for Venture Capital. I hope you've been enjoying your pancakes. Me, myself, I like a bit of lemon and I like a bit of sugar. You can join me on Twitter. I'll be there all week, and I haven't decided what I'm going to give up for Lent yet. I'm thinking either chocolate or alcohol. I can't choose. Anyway, have a great one. Goodbye.